And we also have here Gonzalo Gortázar. Welcome. He's the CEO of CaixaBank Group. And well, going back, just a brief introduction. Going back to Spain app, it is important to say that we are an active market builder. And we work to promote the impact investments. But for this purpose, it is crucial to count on a national leader to influence the market towards impact economy. In Spain, we are grateful to have the leadership of CaixaBank Group on this role, and today we are glad to have here with us Gonzalo Gortázar. Thank you very much.
So I've been talking about the Impact Task Force, and I'd really be very interested in how you see the ITF, and in particular its call for transparency.
Well, sure. Thank you, Cliff, and well, thank you, everyone, GSC and NAB for being here. It's obviously an honor for us to chair the Spanish NAB. Call for transparency, I find it's necessary and urgent, I would say. Both necessary, obviously, when we look at sort of broader impact and the sense that we have that we want to move in the right direction. I think we basically need to measure the impact of our activity. That's very basic, but obviously, as the ITF says, if you don't measure something, it's very difficult to manage it across the board. So we need to measure, and that means data. And that's still today a challenge for, at least for many areas, where not easy to find the right data, and certainly we need to do a lot of work on that front. Once we have the data, we obviously need to do the proper disclosure. Disclosure needs to then be comparable, so we need standards, you mentioned that. The ISSB is a big initiative there. And then we're going to need to have some proper scrutiny of what we disclose according to these standards, some audit or clear review of what we say. Now, this is very simple, but actually we don't have this. It's very difficult to think we are really making progress on this front. And I'm saying it's also urgent, in my view, because we have now created this sort of sense in the public opinion that this is sort of the right thing to do, that we need to do something, no? When I look at public opinion, I think of now for us, our clients, who when we ask them, actually they say 90% and more that sustainability-related issues are important for their decisions. We see it when we talk about hiring new people and even retaining talent. Sustainability is a big driver indeed. We're seeing it in the financial markets. You mentioned that figure 40%, which is quite impressive. We had thought about it, I don't know, even 5-10 years ago. So all this is happening. We have even regulations, supervisors for the banks. We have a sort of a climate stress test and all kind of reviews, thematic reviews by the European central banks into how the banks are really approaching sustainability-related issues, particularly with a focus on climate, I have to say. But all this is happening now, so we actually need to deliver something soon in this walking between the rhetoric and the results, not the walk the talk. We need to deliver something soon, and clearly that first pillar, which is a sine qua non condition, is transparency. And there we need to make substantial progress soon.
One of the other issues that I was mentioning from the Impact Task Force was this connection between environmental and social, and how inextricably linked they are now. Is that something that the finance sector can assist with?
We certainly are going to try, Cliff, but it's a tricky one. You say generally the progress we seem to be making in getting ready to do this energy transition and incorporate environmental factors in the decisions, and hence the funding is, I would say, fairly more advanced than social aspects. And sometimes I feel the world has a very clear interest in solving a climate problem, because it affects everyone in the planet, whether you're rich or poor. But the vested interest in changing things from a social point of view is clearly more difficult. And in fact, when you look at it, we haven't been able to solve it for the history of humankind, basically. No? So it means we're really likely to need more on the social front. Now, going back to your question, the banks. No, the banks are at the heart of the business flows. The financial system is really critical in allocating capital, and the financial system in a broader sense, including obviously the capital markets. So whether we like it or not, and I say we like it, but some people say, well, we don't like it because it's more work. But anyhow, I say we like it. Whether we like it or not, we are in a position to change things and to influence things in a big way, and it has to be through not just influencing ourselves and be sort of good citizens in our own quarters, but mostly through the relationships we have with our clients, and somehow acting as a transmission mechanism of what society wants, and eventually also regulators, supervisors want. This is very clear, back to my first point on the environmental side, where even if we didn't like it really in Europe, the regulation is moving us from a world where, let's say, a good corporation and a good bank would say, okay, this is my business activity, I do it as well as I can, I try to make money, obviously, for my shareholders. Then let's look at the limits, and then there's one extreme where I don't like to do, I will not sort of fund certain activities or certain clients because they're really fundamentally bad to society. And then later on I'm going to say, well, all the good things I'm doing, let's highlight a few of them, because I think my normal business activity actually does some good. So I'm going to try and make public statements and tell everybody how good I am because I am also doing all these things, which is fine. But I think this is the old world. Now what we are being asked to is, say, fundamentally change. And rather than having an ex post version of this thing I do not do and these other things I'm going to show off, it's ex ante. Every single decision I make needs to incorporate these factors before it is made. No? And that's why we are really in the process, because this is not easy, changing fundamentally the way business decisions, in particular for a bank, the way credit decisions are made. No? And this, we actually have to do it. Certainly in Europe, not only because society requires us, but supervisory is going to require us. Yeah. It's already doing it. So if we have to change the way we do things and we make decisions because something is happening coming out of the energy transition, climate considerations, etc., we might as well do it incorporating also all the social considerations that are so critical. And obviously, as you correctly pointed out, there's an interconnection between climate transition, the impact on certain particular countries and parts of the population, and hence more need than ever to make sure this transition is a just transition. This is how we do it in Spain, but I wonder how you do it elsewhere. I guess in emerging markets maybe much more complex.
Much more complex, much more challenge. I would say 100% more challenge. And I'll give an example, and that's the joint energy transition in South Africa. This was a commitment from COP26, $8.5 billion to help South Africa's coal industry get into clean energy. And intended as a flagship, if it works, then it could go into Indonesia, into a whole set of other countries, emerging economies where coal or oil is part of the challenge of the climate. But then look at this. It's 150,000 miners in South Africa. 130,000 of them are in one province. That one province is full of coal, but it's not very suitable for solar or wind-based energy. So that challenge, you imagine 130,000 people in one province, plus their families, plus all of the other people that work around it. This isn't just about reskilling people from mining into solar and wind turbine, etc. It's probably rehoming, it's probably resettling people across the country. So these are immense challenges, really immense challenges. And the hope here is that we will learn from this flagship project. Certainly the South African National Advisory Board for the GSG is looking very closely at how they can support the social transition and also the labour organisations, which are very, very strong in South Africa. So that's the challenge, but there are also immense opportunities in emerging markets. Africa and Southeast Asia are the two biggest growth markets for the next couple of decades, probably. There are needs around education, around healthcare, as well as the clean energy approach. So, impact investing in those areas can be extremely positive, and it's not just the negatives and the problems. It's also the opportunities. It's one of the things that we see working across the regions. If we talk to people in Europe or North America about Africa, it's all about the problems. When we bring the African leaders together, they're full of energy about the opportunities and working more and more about domestic pools of capital, not just reliant on Europe and America. So lots of positives there. The other thing for me with the emerging economies is that they also should have an equal say in this new financial order that is coming through, so that this approach of harmonized standards, regulatory reporting through to impact valuation is designed not just for Wall Street, City of London, Tokyo, etc., but also works for Africa, for Latin America, for Southeast Asia. That, I think, is hugely important. The last thing we want to do whilst trying to improve on climate and social is to leave the majority of the population of the world left behind in the way that the previous system has left them behind. So that's my thinking on that. And that's one example of how investment can be escalated. From your point of view, how can we make both impact and sustainability more mainstream in banking and investment and so on?
It's a good point, Jeff, Cliff. In fact, I feel our role at Caixa with our market share, our DNA obviously is very close to ESG, particularly to social considerations. But our main role today is with this 25% of the market, and even more than that in certain areas, is to try and take something that some great people, like sitting in this auditorium, are thinking, doing, sort of the pioneers, make it mainstream. That's where we have our great possibility and to some extent our mission, no? And again, I think where we make it mainstream is by making sure that we work with our clients, with those 20 million clients. If you look at what we do, it's obviously as a financial institution, a big part of what we do is capital allocation. We receive funds from depositors, and because as you know, we're very large in asset management and life insurance and the like, we also receive that from investors, savers, and we have to do something with that money for maximizing the returns of our clients. And there we have over 225 billion AUMs now in Spain. So it's very significant, certainly for the size of Spain. How do we invest this money is very relevant. I think one is making sure the investing philosophy, the culture of the whole organization is based on responsible investment. We have been A+ by the UN PFI for some years now. We are now changing our product range. Approximately 35% of our mutual funds and 47% of our pension funds are now Article 8 or 9. And certainly we've been extremely conservative in deciding when we have a product that's Article 8 or 9, out of which we, as you know, we are the largest impact manager on the equity side. We close to 3.5 billion of impact funds currently being offered to our clients. So the philosophy, the products and services, and very importantly now, the way we interact with our clients. The new SFDR, the Sustainable Finance Disclosure Regulation, will, starting from this summer, is going to force financial institutions to ask their clients when conducting suitability tests about sustainability preferences. No? And then we have approximately 6 million between the sort of life-saving and mutual funds and other sort of investor savers for us, engaging 6 million people onto this dialogue. It's a major way of changing things. It's a major way of making it mainstream, so very relevant. That's the investing side. Then we have the credit side I referred to. Same way we have 225 billion on one hand. On the credit side, we have 360 billion. Obviously, again, a lot of money. And here, I think the most notable is precisely the net zero. We have many banks globally have committed to net zero by 2050. I share your concerns about the speed at which the world is moving away from these objectives, but that's another topic. In any case, we're very soon, after the summer, going to start publishing baseline figures for CO2 emissions from now to 2050 on various industries, because obviously it's not the same technological solution for certain industries and other industries, always on the basis of science-based targets, and say, how do we get from point A today, 2022, to be net zero in 2050, and because this is a very long period, obviously, with some intermediate milestones, particularly 2030. And in this way, we're going to be able to disclose and report what the plan is and whether we are being able to work according to the plan or have a deviation. If we have that deviation, why is that, and what are we going to do to correct it? No? So plenty of change on the way we lend the money to our clients, which is coming.
I think I should move to Spain because for my personal pension fund, it took 3 years of painful, agonizing, please, please, please give me a sustainable pension. It looks like it would be very easy in Spain, but hey. So yeah, I'll pick up on perhaps on mobilizing investment in developing countries, if I may. And I would pick out there just on the chain. So if you think of the money that goes from Spain, from Europe, from UK, from America into developing countries, you start off with the countries, the donor countries. You go into development banks. They go into development finance institutions, which go into investors, which go to local banks in, let's say, Africa, which then go into microfinance or CDFIs, which then finally get to some kind of enterprise. That whole chain, almost everybody you ask will say, please, can we change? You know, can we get more mobilization? Can we take some more risk? Can we make some breakthroughs? But then each person says, yeah, I'd like to make that change, but the people above me are stopping, and the people below me are stopping, and everybody is locked. And that's why Laurie Spengler, who particularly worked on this part of the task force, says, you know, we have to have a whole system, that whole chain move at once. Now that's a very big goal. However, Finance in Common, this organization which now brings together all of the development banks, DFIs and so on, is pushing for it, and there are some initial moves from some of the DFIs and the development banks. So there's some movement there. Another area in terms of developing countries is often the lack of risk history. So because you're going into a new field, you don't have the history on what the level of risk is, and therefore you tend to get a mispriced level of risk. higher costs, and those higher costs are too much for many emerging economies to use. So catalytic capital blended finance is hugely important in getting those kinds of breakthroughs so that you can then start to see what the real risk is and get it to a usable price tag. Actually, blended finance more generally, really useful and becoming an ever more important part of the scene. Catalytic, blended capital, use of guarantees, use of insurances, securitization, subordination, hedging, all kinds of tools that are being used to try to open up the opportunities for capital into Africa. All just really taking risk off the table or just understanding what the real risks are. And I suppose the other thing that I would pick up is some of the tools that Sir Ronald mentioned, the tools of results-based finance. And some of you may have heard about social impact bonds, pretty small-scale initiatives where you identify a social or environmental goal, an investor puts up the money and is paid back on the results, the actual results. Fairly small, never really took off at big scale until COVID. So Novartis, a number of other healthcare agencies, and then Gavi, the Global Alliance for Vaccines, now in the billions of results-based finance. And Gavi is producing actually a report later this week on how the value of results-based finance, this impact tool of finance, has been crucial in the more developing countries through the COVID change. So I think there are a number of ways in which we can look, particularly for those emerging economies, developing economies. Of course, alongside that, people have concerns about greenwashing, impact washing, a lack of integrity of the system. So as we've gone very rapidly, for example, in ESG, from the first billion to what looks like a 40 trillion of ESG, how do we deal with this issue of impact washing?
We eradicate it. That's the simple solution. I would be not making any compromises. Greenwashing is fundamentally wrong because it undermines the credibility of the whole effort. And that's very risky. So I think we need to be very serious on that front. Organizations are going to need time. You have to disclose things. Some of them may not be you may need time to correct them. You may need to put out plans now, but give time to be corrected. Supervisors in general should also bear in mind the fact that this is a very long trip, so that while plans are put out and the market is scrutinizing whether the plans are correct or not and whether people are meeting or not their plans, what I think should have no excuse is greenwashing, full stop.
Full stop is good. I see this as a transitional piece, actually, that we've very rapidly shifted towards more sustainable approaches for finance. And actually, the skilled staff haven't been there. It's developed so rapidly that we haven't got the people who can really work through. And so I see it as transitional. I would hope that now, we will train more people to look at the integrity. We will also have more regulation around it, and SEC. The European system, the UK system. I think the recent example in Deutsche Bank in Germany, which led to some departures from staff who had not been careful enough, let's say, about the integrity of their products. Things will change. I also think that the systemic change, if we have harmonized standards, it's much easier to know, for everybody to know, okay, if you're looking in this direction for your investment, this is the standard. It's not that you've got a dozen different competing standards and you're going to pick the easier one for you. That will help. Regulatory reporting will help. Impact valuation will help so I see this, as I say, transitional, improving rapidly. I like your full stop. I'm not sure quite when the full stop is placed on the piece of paper, but soon, I would hope. I know we're coming to a close. Perhaps it's worth us just sharing what we think 3 years' time would look like.
Well, thank you. I think 3 years from now, my expectation is that we will have made substantial progress in a transparency point. We have to, no? So that we have been able to publish data, harmonize those standards, and are way advanced into the process of is this data correct, complies, and to have these ideally on a global basis, but certainly on a sort of Western world that is going to need to lead in any case in this transition. And particularly us here, I wish that 3 years from now it's clear to the society in Spain and Portugal that we are really at the forefront of change and impact. And that means a lot because it means doing many, many things. And just few other considerations. Next 3 years, I think we have the risk of the greenwashing we discussed. We have the risk of the lack of level playing field globally being an excuse for people not to move, and that's a concern. I think we need to move in any case and not wait until everybody in the world agrees, because then we will never start walking. And I'm also concerned about the green excess in terms of investment. We have to, as money managers, also be reminded every day that there are good and bad investments, regardless whether they are green or brown, and that I don't want to see over the next 3 years some sort of perception that green investing and impact investment is actually deliver subpar returns, because that may put into question what is the general view today, that sustainability and profitability actually can go hand by hand, and in fact, for us, they have gone hand by hand. So those are some of the risks. I think 3 years from now, Cliff, we may be facing what you're saying, that even with all what we have planned, it is not enough. Hence, we need to revisit how do we do the transition, because in terms of CO2 emissions, it doesn't seem that we're getting there. But at least we should have sort of planted the seeds for everyone to know what the consequences of what they are doing are, and hence to be able to take corrective actions later on.
I would agree with all of that, but I think there will be a fight, and I think we've seen the first fight back against impact. Mike Pence, who was the vice president under Trump, just recently saying, even ESG is evil. It should be wiped out. There will be politicization of this, and it will be important, I think, for those of us who really do want a planet that people would actually want to live in. We need to have our arguments very clear. We need to have the data. We need to engage with the public. We need a full movement towards impact investing, and it's just so important. This I just take one little example, and it's an example from Ghana and a conversation I had from our National Advisory Board in Ghana, Amalati, and we were talking about mobilization of capital, and she was saying, yeah, really important for their country, and they're also opening up local pools of capital and so on. But then she said, well, which is all great, but unless the global north stops pumping CO2 into the atmosphere, the coastline of Ghana will be flooded, and the north part of Ghana will be a desert. And all of that work on SME finance, mobilization, and so on, all of that will be wrecked. This is something that is just so important, and when we talk about climate change and sustainable investment, we tend to do it in rooms like this, where Yeah, it will hit us, but we can survive it. There are many countries where it is not survivable. This is such a huge and important change. So I would say it's really important to have all of those measures that you were talking about. It's important to have a mobilization of the public as well, for all of us to realize that everything we do is a part. We're either for the future or against the future. I'm sure that everybody in this room is definitely for the future. And my guess is if we go a bit further out, 10 years, 20 years out, people will look back and think, how on earth could we ever have thought that an investment or a big company should not consider the harms that it was creating? They would think it was like, the earth is flat. It would be seen as ridiculous. That's where I'm looking for. And I hope all of you as well will be part of this change. Thanks very much, Gonzalo.
Thank you.
Wonderful conversation.